Hey folks, Dan Frio here with your real estate update for December 12th, 2023. So as you guys know, Federal Reserve is meeting this week. What are they going to do? Well, we're going to analyze that with the data that's out today and the data that's out tomorrow to give you guys a forecast of what the Federal Reserve is going to do. So stay tuned for that. But we start out each day with where mortgage rates are and the whys behind it. Why is what's taking place? Well, the Federal Reserve is meeting this week. If you guys don't know, they're coming out on Wednesday telling us what they're going to do. So I'm going to give you a forecast of what I expect them to do, and then Wednesday will come out and I'll see how my forecast actually panned out. So to start out every video, we go over the mortgage rates. Where mortgage rates are? Well, these mortgage rates are published by Mortgage News Daily on a daily basis. Basically what this is this is a national average. What they do is they survey lenders all over the country asking them, what is your rate today? Now, if you had a borrower that's buying their first house and it was a single family home and they have a 740 credit score putting down 20%, what would the rate be? There they are. So if that's you, then that's most likely where your rate's going to be. If that's not you, I'd love for you to reach out to us so I can help you navigate this environment if you're looking to buy your first home or maybe your first investment property. So I'll give you all my information at the end of this video. So without further ado, let's get into the details that we have this week that's coming up to the Federal Reserve meeting on Wednesday to figure out what the heck they're going to do. So the first thing we want to look at is the news that came out today. The news that came out today, the big news, consumer inflation. What did it do? Okay, so about a year ago, June of 2022, we had inflation at 9%. Right now, we have it at 3.1%. Let me give you a chart of this. So right through here is a chart of where inflation's been. Okay, if you look at this, in June of 2022, we're at 9%. Scroll down a little bit. You fast forward to June of 2023, we're at 3%. So what the Federal Reserve has done is actually working when it comes to the inflation front. So that's that part of it. And I'm going to dissect and really take a deep dive in the CPI number here in a second for those economic geeks out there. But the intriguing piece is right here. Everybody's expecting now the Federal Reserve to start cutting rates next year. I'm expecting them to start probably pivoting around March, but only time's going to tell. So basically, this is what we're looking at right now. So we want to follow what the Federal Reserve follows, and they follow inflation. So let's get over to the inflation numbers we have so far, and then we have some more data coming in tomorrow that I want to go over with you as well. So what we have on the screen right now is the CPI. CPI is consumer inflation. Think of the C on the front of that as consumer, okay? You have core CPI, and then it says MOM. Then you have CPI MOM, and then you have CPI YOY. What is that, okay? Well, the core CPI, well, let's go over CPI. CPI is a basket of goods and services that you and I use and do, okay? So it's how much we pay for gas, how much we pay for food, how much we pay for insurance, how much we pay for cable. They take this whole basket of stuff that we use and they compare it over time. So you might see month over month, you might see year over year, okay? What the core piece of it is, they jump into that basket and they pull out food and energy. Why? Well, because it's really volatile. Just in the last 30 days, gas prices are down over 6%. Okay, so those huge fluctuations, they want to take out those fluctuations in that. So that's why they do a core CPI and just a regular CPI. So if you look at the numbers, the core CPI last reading, last month, was up 2% or 0.2%. The forecast was it to increase a little bit to 0.3, came in right in line. Okay, here's the kind of the curveball that's being thrown. CPI, that's just the main CPI number, last reading was 0.0. It was expected to come in at 0.0. It came in at 0.1. You wouldn't think 0.1 is that big of a difference, but it can be when you're talking economic data. And then CPI year over year, last reading was 3.2. It was expected to come in at 3.1, came in at 3.1. So the markets basically kind of anticipated all this. So let's get over to see what's happening to the bond markets. But just before we do that, tomorrow the big news is producer inflation. Okay, when you look at PPI, the P on the front of that is producer. Think of that. So what you're thinking is, or the thinking behind this is, if producers are their prices are going up, they're probably going to float over those price increases to us, the consumer. So if this number continues to rally up, then this number most likely is going to go up. Hope you follow me there. So with this economic news out today, and this is the biggest news that we have this week, coming in front of the Federal Reserve coming out on Wednesday, right through here, Wednesday at 2 o'clock. Federal Reserve is going to come out and tell us what they're going to do. The rate that they affect is the federal funds rate. Right now it's at 5.5. They're expecting it to stay at 5.5, and so am I. Okay, so with this data that we have so far today, what's happening to mortgage rates? So to do that, what we do is we go over to the bond market, because the Federal Reserve, just so you guys know, the Federal Reserve does not control mortgage rates. Okay, the Federal Reserve controls what's called the federal funds rate. What controls mortgage rates is this bond right here. So we want to follow this bond to see what's going on. So with the data that we have today, what's going on with this bond? Well, if you look up through here, this is the price of the bond, and this is the adjustment for today. So far, the mortgage market or the bond market for mortgages, it likes the data that comes out because the price is up. So what that means, if a price of a bond goes up, I don't care what kind of bond it is. It could be a Treasury bond, a corporate bond. If the price goes up, the yield or the rate comes down. So in this case, if the price of a mortgage bond goes up, that means mortgage rates are coming down. So it's up 11 ticks. That means we're probably going to pick up maybe minus 0.02, minus 0.03 to rates. We go over to mortgage rates. You see it right here. So we might be at 7.07, 7.05 by the end of the day, but it's still early. Time's only going to tell. So that's my economic class for today. I hope you find this informative. If you do, please don't forget to subscribe down below. So now coming to me, if you're out there and you're looking for maybe a reverse mortgage, we do a lot of reverse mortgages. I love helping people get into those loans because most of the time they don't really know what's going on, so we can help them navigate step by step. But what we do a lot for a lot of people is we help them navigate trying to buy their first house. We're here for you. How you can reach out to us is go to therateupdate.com. It's right here. We love working with first-time home buyers because it's like molding a piece of clay. And the tough thing is trying to get them or educate them on all the videos that they've been seeing saying, you know, the housing market's going to crash, mortgage rates are going crazy. It's nice to help educate them on the facts. So that's what we try to do here on my channel. So if you'd like to check us out, me and my team, please visit us at therateupdate.com. And if you'd like to reach out to us, there's several different ways you can. Okay, the first is if you want to apply for a loan, we have a little different kind of technique that we do. If you look over there, you can hit the apply now button. What it does is it doesn't launch you off to a mortgage application. What it does is it asks you a few questions, and then you'll schedule an appointment with me or one of my mortgage advisors to kind of go over the exact program that's relevant to you. Okay, and that's what we do. But if you're out there and you've already locked in with a lender, so here's what happens is once you lock in your rate, you're stuck. Okay, so you noticed on where mortgage rates were. Let's go to where mortgage rates were. Right over here. Rates today are 7.1%. Rates probably about 45 days ago were 8.03%. So if you locked in at that rate, if you're in the high sevens or low eights and you're locked in and you still have not closed, what I suggest you do is go to our website, therateupdate.com. It says right there, loan estimate. Okay, you've gotten a loan estimate from your current lender. Please upload it into there. We're going to analyze it with up to 60 different lenders to see, can we get you a lower rate? Can we get you lower fees? Maybe we can get you C, all the above, a lower rate and lower fee. But if you'd like to reach out to me just to talk or you want to email me, please just go to the Rate Update, scroll down. You're going to see blogs, mortgage calculators, and a whole bunch of other stuff. At the bottom of our website, you're going to see our phone number and the email address where you can contact me directly. So thanks so much for watching, guys. God bless. And if you haven't subscribed yet, please do so right down below. And we also have a newsletter down there that we just posted. So if you want to follow rates and you want to follow content like this on a weekly basis, we send that out on Wednesdays. You can subscribe to our newsletter down below. God bless, guys. Thanks so much for watching. See you tomorrow. Bye-bye.